Making Sense of Your Money podcast, where every conversation is built around one idea. Your money is a tool to design and live your version of a rich life. Now, here's something most high earners don't realize. The financial advice they're getting, no matter how smart their advisor is often built on incomplete information. You might have multiple accounts, income streams, equity comp, and pieces of your life scattered across different advisors, and nobody's seeing the full picture. That's not a planning failure. It's a data problem, and it changes everything. So today I'm speaking with Kevin Knull, a financial planning veteran who's built technology at MoneyGuidePro, has run registered investment advisors and family offices, and now founded taxstatus.com, a tool that's fundamentally changing how advisors access and use comprehensive financial data. We're diving into why complete information matters, how tax planning is the biggest lever most high earners overlook, and what's actually possible when advisors have the full story. Before we dig in, make sure you're subscribed on your favorite platform. And if the show is adding value, I'd appreciate a quick review. Thanks and enjoy the episode.
Brought to you by Tailored Wealth, helping business leaders live their version of a rich life.
Welcome to another edition of the Making Sense of Your Money podcast, where we cut through the financial noise and help business leaders to make smart, confident money decisions. All right, Kevin, thanks for joining Making Sense of Your Money. Really excited to chat with you today.
Likewise, Dan.
Yeah, this is going to be fun. I know you've had a unique and distinct background in the financial advising space, and I'm excited to kind of get into that. But if you don't mind, give our audience just like a quick high-level overview of what you've done in your career, and then a little bit of a discussion around taxstatus.com.
Sure. So I'm a little bit of a unique character here in that I went straight from the military into the distribution side with a big company. Did that for about a decade, and then became a CFP. I've run RIAs and broker dealers and family offices and so forth. Ran MoneyGuidePro up to the big exit to InvestNet, and so I'm kind of one of those guys that I look for challenges or problems and try and figure out a way to improve upon them. The big problem that I've tried to solve my whole career is how do we improve the quality of advice? And so what I'm very focused on here at Tax Status and every engagement that I've ever been involved with is how do we make advice better for that end client? And that's a big task, but that's what we're looking to do.
Yeah, very, very cool. So for those that don't know, tell us a little bit about MoneyGuidePro and what that transition looked like, because obviously a hugely successful business in our space. But for those that aren't as familiar with financial planning and the tech that's out there.
Yeah, so financial planning has evolved, right? It started out really back in the days, and I would say the insurance industry really kind of paved that way of how do you identify outcomes and try and get there. And it's evolved to a fiduciary standard of focusing on all the disciplines, ideally, right? It's not just asset management or wealth insurance, risk planning, but estate planning, tax planning, cash flow planning. And so, we've seen the industry evolve to sort of single disciplines to now it's more like a family office operates. Firms are being expected to render advice across all the disciplines because they all intersect, right? Tax and wealth management are directly connected. Financial planning is directly connected. Insurance, you make a bad insurance mistake, that can really impact, that estate and financial plan. And so, whereas when I was at MoneyGuidePro, we were really kind of laser focused on, planning for retirement and the distribution, ultimately accumulation and distribution of wealth. Today, I would argue it's much, much bigger. So, now we're trying to solve that whole continuum of accumulation up to retirement and then distribution during life and after death. And that's a much more complicated picture that requires more than kind of the basic tools that we've been using over the years.
Yeah, couldn't agree more. We're very much a financial planning focused firm. And I love what technology has allowed us to do. And you mentioned the concept of a family office. I love that the family office style services are now available to most investors if they truly seek that out. And the last point I love you made is no longer is an advisor, in my opinion, expected to do investments or insurance or tax planning. It really can be bundled into one offering, which I think makes our role as advisors a lot more important, but it also makes the value that we provide to the end client a lot better. So,
Yeah.
love what you're saying there. So great. Tell us a little bit about taxstatus.com. What was the thought process behind it? How did it get started? And then tell me a little bit about the offer today.
Yeah, so my partner originally identified the problem as he was sitting with a tax planning attorney who was sitting on hold for hours while they were meeting, trying to get some information from the IRS. And
Hmm.
the IRS says every taxpayer is entitled to their data, but it's very difficult to get that data, particularly at scale. And when we think about advice, and particularly fiduciary advice, it's always been limited by kind of two factors: human bandwidth and data, right? There's only so many hours in the day, and there's only so much data that you can get from your client efficiently. And at the time, he was focused on how do we help taxpayers get data so they can be more informed, have greater transparency, and make better decisions over time. And when I joined here a couple of years ago, we hooked up and I said, what if we could take this data, eliminate the friction of obtaining the data so that we can help solve both the bandwidth issue and the quality of data issue for financial advisors and tax professionals and tax attorneys. And that's what we've done. And so we've created a frictionless way for advisors and firms to get that data on behalf of their client from the IRS and bring that data back so that better decisions and better planning can be rendered.
Yeah, super, super cool. I want to talk about it from two different lenses. I want to talk about it from the end client's lens, and then I want to talk about it from the advisor or tax professional's perspective. Okay, so
Okay.
I get it. From the advisor and tax professional's perspective, they get essentially access to data that they most often need to work really hard to get. Right, whether it be digging through tax returns or your point, oftentimes sitting on hold with the IRS. I think that's a great motivation to want to build a product for sure. But tell us a little bit about what that looks like from the professional side, whether it be the advisor, tax professional, attorney, et cetera.
Yeah, so let me couch it this way. I have never met an advisor ever in my career that has all of the information.
Right.
Okay. And there's a fundamental flaw in how we render advice today is we are dependent on the client giving us the information. So I'd argue it's very similar to you going to a doctor and saying, I want you to give me a full physical examination, but I'm only going to let you look at me from the shoulders up.
Yeah.
That's what
Good analogy.
that's what we do today because clients don't share everything. And that is the problem. And it's actually worse than that. Sometimes clients don't want to share everything because they have multiple advisors or and they don't want you to know or they're embarrassed by that. Sometimes they don't remember. And that is a very common situation, particularly as our clients age.
100%.
There are certainly other reasons. Sometimes, spouses don't share everything with each other and
Right.
they don't want the other to know. There's just a lot of reasons why this happens. So unfortunately, you're being held to a fiduciary standard to render advice in the best interest of the client, but you're doing so with only part of the information. And
Right.
that means you and the client are at risk because you don't have what you need to render complete and proper advice. What we do at tax status is we say, you're still going to be dependent on the client giving you information, but the IRS knows every bank account and every brokerage account and every retirement account and every dollar of income. They know it because it's being reported by custodians, by banks, by employers, by casinos, by the crypto custodians. All of this information is being reported to Uncle Sam because they have to receive it in order to determine what you owe in taxes. And so we're simply leveraging the richest data set that exists that already belongs to the client. We're the conduit for making it easy to get that data so that you, as the advisor or planner, can get that data easier and build that more complete financial plan.
Okay, great. So for those that are out there that don't maybe understand the full scope of what that data looks like, how is utilizing tax status different than the client, let's say, uploading their tax return into the financial planner's planning software.
Okay, before I answer that question, Dan, tell me how do you gather data in your discovery process with your prospect?
So when we do a discovery process, we have multiple pieces of technology that are sort of integrated together, but we are doing a combination of asking them to enter information, upload documents, and then having a conversation about stuff like goals, objectives, what they're looking to accomplish.
Perfect. So let's think about the typical data gathering process for the client. If you use one of the financial planning tools, I won't mention which one, there's like a 70-page data gathering form.
Yep.
That is a terrible experience for the client to complete a 70-page data gathering form, and they don't even know where all that information is. So, that's a big ask of them. Asking the client to give you a copy of the tax return is yet another big ask, and it feels very intrusive. What we're able to do in about 41 seconds is have the client or prospect give us consent securely to go to the IRS and bring back the data that the IRS has. So that process is so efficient that before you can even ask the client to write down their name, phone, email, social, etc., we are already able to get consent from the client from a link on their phone that they can give us back everything. So what we're able to get back from the IRS with the client's permission, of course, is name, phone, email, social, date of birth, address, spouse name, spouse's date of birth, number of dependents, number of businesses and partnerships and LLCs and S corps they're in, how many trusts are they in, their total income, their AGI, their marginal and effective tax rates, their deductions last year, their income over the last 10 years, and the last 10 years of tax returns, as well as whether they owe taxes, as well as every dollar of income and where it came from. The list goes on and on. The key difference, though, to your question is a tax return is self reported. Right? You can write down anything you want on a tax return and send it to the IRS. Just know there's a steep consequence if you write something wrong on there. But the IRS is also getting data from 7 million other reporting sources on your behalf. Every bank, every custodian, every employer, every business that you've made an investment in, every asset manager, every private equity holding, they're creating K1s and 1099s and W2s and 1065 and so forth. All of this information is coming in. And so we're receiving not just the tax return that the client submitted for the last 10 years, we're also getting the other side of the equation. The other side of the equation is what the IRS knows. What the IRS knows is every dollar of income and all those other things. So they're just waiting for you to self-report your tax situation so they can line it up with all of those other data points and see whether you were honest and you shared everything. If you weren't, or if you failed to disclose something, they're going to ding you and say, hey, you underreported and you owe this much money. If there's a consistent behavior of that, or the numbers get too big, then they might flag you for an audit. We even know whether you're being audited in advance because we're getting not only all those reporting sources, we're also getting the activity attached to the client record at the IRS. So we know, Dan, if you already filed your tax return, once you give us permission to get that data, we know if you made your estimated tax payment. We know if you owe taxes, penalties, or interest as of today. And, it's a monstrous amount of information that the IRS has.
Yeah, I think that for the average investor, they don't understand truly how much information the IRS really has, right? They think it's just the information that they provide, but to your point, it's all those additional data points. Okay, really, really interesting stuff. So now let's flip it from a client, or let's call it a prospect, just call it an investor's perspective, right? How do we get them comfortable with, especially if they're new to an advisor and there isn't that heightened level of trust built up, how do we get them comfortable authorizing the pull of all that data? What does that authorization look like? And how do they know that it's secure?
Okay, so usually this is the biggest concern from folks when they first hear about us. Our process is completely secure. Our standard process is to have the client log in with ID.me to authenticate themselves, which is the government method of authentication for the IRS, for VA benefits, for Social Security, et cetera. It is completely secure. It is the best solution that exists today. That's what we default to. And that's what most of our clients, the end clients, use to log in and give us permission to go access the records.
Okay.
If they don't want to use that or they don't have an ID.me account set up yet, they can also upload their driver's license and do a selfie like you do at the airport so we can confirm they are who they say they are. And then they have to enter in a little bit of information, and the process is the same after that. And so we have almost zero pushback from end consumers because it is so secure. Usually, the only occasional time we'll hear that is if the taxpayer wants to know how is this information used and is it shared with anyone, and the advisor might get a one phone call out of 500 that asks that question. But we don't share the information, we don't anonymize it, we don't do anything with it other than provide it to the advisor they've asked us to share it with. And then the only other question we get occasionally is security or SOC 2 type 2, the certified and so forth.
Got it. Got it. Okay. How long does the process typically take? Investor, advisor, I imagine, sends them, some form of login, and then they go through the ID.me process. How long does that usually take?
It takes about 41 seconds, start to finish. The advisor or firm just sends a link. So they send them a secure link. That link, again, no passwords or anything necessary. When they get the link, they click it, log in with ID.me, get to do the dual factor authentication, write an e-signature and a date, and they're done. That's it.
Super cool. And then what are most advisors doing with this information? Are we integrating it with the financial planning platforms? Are we pushing it into a secure vault? Tell me a little bit about what happens from there.
So the use cases, I've lost track of how many use cases we see folks using it for because you need this data everywhere, right? You need
Right.
the data in your CRM, you need the data in your financial planning tool. So the question that I ask everyone is, what problems are you trying to solve, right? We have firms right now that consume our API to populate financial planning tools or CRM, or we now have firms using it to populate completing the ACAT transfer paperwork to make that experience better for the client.
Yeah.
We have firms using it for prospecting to avoid having to, ask the client a bunch of information. Don't ask them anything. Log in with ID.me and then we'll schedule an appointment with you to talk through your situation because we can identify all kinds of planning opportunities just from the tax data. So it really just varies on how the firm wants to, what they need to solve for and how they want to use it. But our big enterprises are all consuming the API and doing all kinds of neat things with it. Not the least of which today is leveraging all that data with AI to identify very specific opportunities for the client.
Got it. Okay. All right. So I want to transition a little bit. So that helps me and our audience to understand sort of what you and your firm do. Let's talk a little bit about how this is making for better planning, right? Because that was your ultimate mission here. I
Yeah.
want you to kind of share, based on your extensive career, what you see as sort of the key challenges today with respect to financial planning, and then specifically tax planning. Where do clients go wrong? Where do advisors go wrong? And then, what advice do you give to both populations?
Okay. That's a big one. Um, and this might be a little controversial, but the real problem with financial planning is and always has been lack of data.
Right.
Okay. Again, that I referenced earlier, if you don't have good data, your plan is nearly worthless.
Mm.
And the same thing with AI. It holds true in both cases. Everybody's focused on the financial planning tool or the AI model and which is the best. The reality is you have to back up and to the kind of dirty little secret. It all depends on the data. If you don't have the data, it doesn't matter. So, you can put in an income number. If that income number is wrong, everything's wrong. You can put in a life expectancy. If that's wrong, because you don't know the client was already diagnosed with cancer, your whole plan is defunct. And so I think that's the biggest issue on financial planning and AI is it is completely 100% dependent upon the inputs. I'd argue there's lots of financial planning tools out there and they all do great things. But if you don't have good data, it doesn't matter. And so I think that's the first issue that nobody really wants to talk about. But the reality is the average firm only knows about 30 or 40% of the client's assets, which means that plan is wrong, right?
Right.
I mean, it's really wrong. And that's a scary thing for all the firms and advisors out there rendering financial planning advice. Tax planning has the same problem, but it's a little bit different in that most firms are rendering tax planning advice if they're rendering it based on the tax return. Well, the tax return was self-reported by the client. So technically, that's really the same issue as when the client's self-reporting their data and their information to you. But firms think that that tax return is reliable. Well, if you talk to a CPA, CPAs will tell you 30% of the time the client fails to disclose all the income.
Mm.
And if they don't disclose it, you're back again in that same do loop with that same problem. And the IRS has 3 years to correct that issue and come after you and say, hey, you misreported, which is why it's so important to see that underlying data now, because the IRS can take their sweet time and you could have already made recommendations, ranging from Roth conversions or whatever it might be that, you were basing your recommendations on incorrect information. And so, I think that's why in all cases in both disciplines, you have to get the best data possible and then recognize and understand and communicate to the client. This is only as good as the information you gave me. If you gave me incomplete information, then this advice is wrong. Period. And I would actually put that in writing and right at the top of my planning engagement. If you have not told me everything, you cannot hold me accountable to the advice I rendered. And I'd make them sign off on that every time because there's too much risk for you.
Yeah, good point. Good point. I've seen some of your content and commentary, and you preach about a topic that I speak about a lot, which is oftentimes tax planning gets done at a period where it's way too late to do tax planning, right? Q4, sometimes even after that. Tell us a little bit about that and how you're seeing the strategy of filing an extension actually work in the context of broader.
So, let me do the extension first because I think most people think an extension is a red flag.
Yeah.
It's a planning tool. I mean, it gives you 6 more months to get better data and have a more complete picture. If you are a higher net worth client and you have, K1s, you don't get those K1s often until September of that year. And so you got to be on an extension to get that right, or you're going to file an amended return once you get that information later, which adds cost and complexity and so forth. It probably also means you miss those opportunities that you alluded to. I think a lot of people think an extension means I owe more. The reality is you still pay by April. It's just you don't have to file blind if you file an extension because you can get that additional information. And that's kind of where we come in because we're able to give all that data
Right.
prior to you filing in October. To your first part though, I would say by October, like your window for planning has shrunk dramatically. You have things that you have to do that take time. If you're leveraging a QCD, you need time to actually get that completed by December 31st. You can't just say a check's in the mail. You have to get it done early. Roth conversions and charitable bunching and equity comp timing, all those things take time. And I think most people wait until they're in extremis in December. And everybody's trying to do it then. And you don't have time to go and find the donor advised fund or whatever strategy you're using. If you wait until December, you may as well just forget about it. It becomes very, very difficult. So I say tax planning starts in the spring. Right now, this is when people should be doing tax planning. And that's going to go all the way through October, not start in October.
Yeah, agreed. You mentioned AI. I completely agree. One of the big caveats with AI is data, right? If the data isn't accurate, the AI can't do its work. How are you seeing AI change the industry today? What do you expect in the future? And then tell us a little bit about how your solutions are set up to help with where we're going.
So this is a big one. I met with about 100 CPA firms recently, and I asked them how many of them actually do proactive tax planning. And the
Right.
answer was that they only spend 7% of their time tax planning. They simply don't have time,
Yeah.
right? They take most of their time, believe it or not, is spent trying to get data from their clients, right? That is the hardest job for CPAs, which is why we have CPA firms as clients as well. I think AI is going to change this dramatically, so much so, and I won't say distant future, I will say in a month, even right now, we are already able to evaluate over 100 tax planning strategies specific to a client in minutes because we have all the data. The average firm who's evaluating 100 tax strategies would take them 45 days and 1,000 hours of work to go through and analyze all those strategies. So the work just didn't get done. They'd look at a handful of strategies that they thought most appropriate to that client, but there are hundreds and hundreds of planning strategies. Well, I do like right now, we're building a massive tax planning tool that will evaluate hundreds of planning strategies specific to the client, optimize them across not only 2026 tax returns, but going out and modeling into the future and how those strategies interact together, because sometimes one negates another and sometimes they can't work in concert with each other. You couldn't do that before at scale.
Right.
Well, what if, I don't know how many clients you have, Dan, but let's say you have 500 clients. What if you could deliver a tax planning analysis to evaluate 100 strategies for every client and come back and say, Mr. Client, I've identified, you know, 27 strategies that can reduce in total 100,000 in taxes this year. I don't care what else you're talking about and how great a portfolio manager you are. You can deliver more alpha with tax planning than almost anything else you can ever do. And unlike returns, and market performance, I can count on tax planning, right?
No
Because
doubt.
we know
100%.
death and taxes you can count on. So
You are preaching to the choir on that one. I couldn't agree more. Tax planning is the biggest tangible wealth alpha that you can create as a professional, no doubt about it. And to your point, it's consistent, right? It's it doesn't rely upon things that are outside of your control. So that's really well said. All right,
I
very
will
very cool. Go
I
ahead.
will add one thing. I think a lot of people are worried that that AI is going to displace everybody, and
Yeah,
I think people are missing it. I just said that the average CPA spends 7% or less time on proactive tax planning. Now they're going to be able to, because AI is able to do the grunt work and the calculations and the research and analysis they didn't have time to do. So I think tax professionals and financial advisors are going to be doing different things. They're still important. They're still going to be around, but they're not going to be cranking out computations or gathering information. They're going to be advising the client on which strategy makes sense in their situation.
I couldn't agree more. I am such a big fan of what technology and specifically AI is doing for our space, because if you're relying on the robot, well, you're putting yourself at risk as a professional. But if you're utilizing it, and like at the end of the day, to your point, the liability, AI is not taking on the liability, right? Like we're taking on the liability. We're using those systems and tools to allow us to spend more time advising the client. And I think this is kind of where you started with the mission statement of your career. That allows us to provide better advice. It allows us to provide better client service. It allows us to get to know our clients better and really understand their entire life and their picture, as opposed to just cramming through their documents. So it's a pretty cool opportunity we have in front of us. All right, cool. So we're going to switch gears a little bit. We're going to get to know you a little bit more. So you are officially entering the lightning round. Kevin, are you ready?
You bet.
All right, let's do it. First thought that comes to your mind. That's the only concept here. One meal for the rest of your life. What is it?
Sushi.
All right. So you've built some pretty cool tools and technology in your career. What's one tool or piece of technology that you couldn't live without other than your computer or your phone?
You got to help me a little bit more on specifics. So you're not saying AI. You're not saying
I'm saying one, it could be hardware, software, anything. What can't you live without? Could be could be help your personal life, could be professional, or anything, anywhere in between.
I think it'd be really hard to live without AI today, with as much as I use it and the breadth of how I'm using it. I think it's changed everything. It's massive.
Very cool. Very cool. One bucket list item that you've maybe already checked off and one that's still on there.
Ooh, that's a hard one. I climbed Mount Kilimanjaro. That was
Nah.
one of my bucket list items.
Very cool.
The one I'm not sure I'm going to be able to do, but it's been on my list since I was 12, was to race the Iditarod. And I think I've missed that window, but I may go up and watch it instead.
This one, that's very cool. This one may align with what you talked about earlier, but is there a skill that you're intentionally trying to get better at right
There's a lot. Just to pick one. I think it's the same. I'm trying to figure out, and leverage the technology we have today to improve the quality of advice. So that ability to collate a massive amount of information to deliver real positive outcomes superior to anything that's ever existed before is what I'm focused on. So I don't know if that's a skill, it's an outcome or objective I'm going for.
now? Very, very cool. Very cool. All right. And then One piece of advice you would give your younger self, what is it?
Oh, I feel like I've lived it, but take the risks, right?
Yeah,
You have to if you want to break new ground, you have to take risks and be willing to throw everything out that you believe and try different things. And I've lived that my whole life, but I think I would have told myself to do that even earlier. I would have said, when I would have told myself when I was a kid to not worry about the outcome and focus more on what's possible.
I love that. I love that. Our mission is to help our clients design and live their version of a rich life. What does a rich life look like to you now, Kevin?
Take care of my family, my friends, my clients. That's, I have that just, I wake up every day worrying about everybody in my life. And those are three distinct categories. If I can deliver on that and help them solve their challenges and achieve their best life, that's great. I'd say that would sort of sum me up as a whole.
Very, very cool. Very cool. Thanks for sharing that. All right. And then finally, if our listeners want to connect with you, collaborate, learn more about you and your firm, what's the best way for them to find you?
My email is kevin@taxstatus.com. It's pretty easy to find me. So just shoot me an email and I'll be happy to chat on any topic.
All right. Very, very cool. Thanks so much for coming on, sharing your insights. This was really, really valuable. Appreciate your time today, Kevin.
It's my pleasure.
All right, that's it for the episode. You can find our podcast along with our newsletter and YouTube channel all for free at makingsenseofyourmoney.com. And as always, make sure you prioritize your version of a rich life.